All right, let's dive into Micron's latest earnings report. Now, on the surface, it might look like just another set of numbers, but what we're really looking at here is the story of a company's total reinvention, a story about Micron pivoting to become absolutely central to this AI supercycle. This quote right here, this is the single most important idea you need to grasp. For decades, memory was, just a commodity, a sidekick. But in the world of AI, it's not a sidekick anymore. It is the main event. It's the strategic asset that literally sets the ceiling for the power and speed of the entire AI revolution. And here is the proof in one staggering number, a nearly 500% explosion in year-over-year gross profit. Look, that isn't just growth, that's a seismic shift. It's screaming that something fundamental has changed in their business. So let's break down exactly what's going on. So these numbers, they're not just about one good quarter. They are the evidence that Micron is finally breaking free from that old, painful boom and bust cycle of a commodity parts supplier. They've repositioned themselves as a strategic gatekeeper for AI. They're not just selling parts anymore, they're selling pure performance. Okay, so what exactly is fueling this incredible engine? Well, it all comes down to one single critical technology that has just hit an absolute tipping point, high bandwidth memory. You'll hear called HBM. So what is HBM, really? The easiest way to think about it is like a skyscraper of memory chips, all stacked vertically. This 3D design creates this massive, ultra-wide data highway. It allows those power-hungry AI processors, like NVIDIA's GPUs, to get the insane amounts of data they need practically instantly. Let's be clear. Without HBM, the AI boom we're seeing just doesn't happen. And the demand for this stuff, it's just off the charts. I mean, get this. Micron's entire HBM production capacity for the entire year of 2026 is already completely sold out. We're talking locked-in binding contracts. This is the stuff that's going to power game-changing platforms like NVIDIA's new Blackwell and even the next-gen Vera Rubin architecture. Now here's where it gets really interesting. HBM creates this fascinating ripple effect across the whole market. See, to make just 1 gigabyte of HBM, you need 4 times the amount of silicon wafer as you would for standard memory. The industry calls this the 4-to-1 wafer penalty. So by shifting all this production over to HBM, Micron is actually creating a shortage of regular memory. And what happens in a shortage? Prices go up. So profits are going up across their entire product line. It's a really brilliant market dynamic. But here's the thing. This success isn't just about being in the right place at the right time. No, it's built on top of a deep technological advantage, a true moat that competitors are going to find really, really hard to cross. Their secret weapon is something called the 1-gamma process node. It's basically a manufacturing masterpiece. They were the first ones to really master this technology called EUV lithography at a huge scale, which gives them better memory density and way better power efficiency. On top of that, they ramped up production faster than ever before in the company's history. This isn't just a temporary lead, this is about flawless execution. Okay, so this all brings us to a really interesting paradox. The results were historic, the tech is top of the line, the demand is completely off the charts. So why on earth did the stock price actually dip right after this incredible announcement? Well, this is the story of the market's anxiety, and it pretty much boils down to 2 very different kinds of risks. So yeah, let's just ask that question directly. With a performance this good, what could possibly be making investors so nervous? The answer, really, is this tension between the amazing success they're having today and some very real fears about tomorrow. The market's hesitation really comes from 2 big fears. The first one is an internal risk, something Micron has control over, its massive spending plans. And the second is an external risk, something they have zero control over, a potential geopolitical black swan event that could throw a wrench in everything. First up, the internal risk. Micron is planning to spend over $25 billion in fiscal 2026 alone, building out these new megafabs in the US. Now, you have to do this to grow, but that number really spooks investors. They have these long memories of the old cash-burning, heavy asset model, and they're worried this spending is going to crush cash flow. And now for that external risk, the black swan. There was a recent attack on Qatar's Ras Laffan industrial area, and that puts the entire global supply of helium at risk. Why does that matter? Well, Qatar supplies about 1/3 of the world's helium, and helium is an absolutely irreplaceable gas used to cool the silicon wafers from making advanced chips. A long disruption there could seriously mess with production and drive up costs for everybody. So there you have it.
You've got this incredible bull case built on tech dominance and insane demand, fighting against a bear case built on spending fears and geopolitical risk. But when you step back and put it all together, the long-term conclusion points to one thing: a permanent structural change in how this company is valued. And this, right here, is probably the most crucial takeaway. The market is being forced to completely relearn how to value a company like Micron. The old model, looking at its physical assets, its price-to-book value, that's obsolete. In the age of AI, you have to value Micron based on its future earnings growth, just like you would a logic chip leader like NVIDIA.
And the numbers tell the story so clearly. If you look at the trailing PE ratio, the one based on the past, it's about 43. That looks expensive, right? But that's like driving by only looking in the rearview mirror. If you look at the forward PE, based on what Wall Street expects in 2026, it's only around 12. For a company that is right at the heart of the AI revolution, that suggests the stock is still incredibly attractive. Which really leaves us with this final big question. Is all this market anxiety and the stock volatility we're seeing a sign of danger? Or is it actually a rare window of opportunity to get into a company that is undergoing a fundamental structural re-rating right before our very eyes? Ultimately, that's the question the market is going to have to answer.